In crypto news today, Vancouver City Council passed a motion to become a Bitcoin-friendly city. In other news, Semler Scientific purchased 211 Bitcoin for $21.5 million. MicroStrategy, the ticker MSTR, officially joined the Nasdaq 100 index. It also acquired 15,350 Bitcoin for $1.5 billion. It is possible that MicroStrategy can join the S&P 500 by the third Friday of June 2025. This is primarily due to accounting rule changes from the FASB, Financial Accounting Standards Board. RL-USD or Ripple-USD will launch globally on December 17th. For the week ending December 12th, $2.17 billion worth of inflows was recorded for Bitcoin ETFs, bringing the total net asset value to $114.97 billion. SoftBank will be spending $100 billion in the US on AI infrastructure. By applying the world's most powerful smart money buy and sell level detection system from CTKSmethod.org to Bitcoin, we gain institutional-grade X-ray vision into where smart money is buying and selling. In yesterday's video, we were at this point, just around the 103,000. We saw a big explosion in price and then a retrace. All of this is explicable through an understanding of Level 1 and Level 2 standard certification, because all charts are structurally bound. And we saw a big takeoff in Bitcoin and then a retracement. What we need to understand is where the structure is inside the chart that we're looking at. It's a little bit more complex than that because we want to understand the structure across different charts as well. In yesterday's video, I said it's really important to look at the structural support level at 102.084. If the bears got control, they would seek to push it down below that. Obviously, the bulls got control and they challenged the 104.185 mark, and there were so many shorts there that we hit the 106.037. You'll notice that this level of structure, which you already knew because it was playing out inside the indicator, and also you can mark it up yourself with Level 1 and Level 2 standard certification. This level was in the market in the past 24 hours and it was obeyed. Unfortunately, there were just too many sellers. A lot of people get confused by these particular lines. Structural levels act as gravitational wells. For example, as things were just exploding to the upside, people thought, oh, this thing is going to $1 million right now. Not so fast. It depends where the sellers are. And we saw there were a lot of sellers at that 104.185 mark and also the 106.037. What we saw was continued sell pressure throughout the day until we came back to the 104.185 mark. Then we found a degree of support and came up and re-challenged the 106.037. We've effectively flipped that into support, but it depends if price continues to hold. Any bullish momentum will take us to 107.920 and upwards of 108.953. And if you want to see the higher levels, you can get this indicator from CTKSmethod.org. If you're new to this kind of structural analysis and looking at SLs or Stanfield levels, they're also called CTKS levels. They are not brick walls. They are gravitational areas. What typically happens is that the smart money inside the market will push price up only to sell it back. We see this all the time. It's a retail trap, basically, to trap people up on the top side of price momentum only to see them fade out as the price comes down. It's a very unfortunate thing, but if you follow structure, you will understand it much, much better. What you want to do is to follow the institutional players. For the next 24 hours, this 106.037 is a particularly important structural level. If the bears get control and they push price down below the 104.185 mark, and that's not actually going to be easy because it was consolidated and flipped to support. So we would anticipate this could hold price in terms of negative momentum. It doesn't mean it can't overshoot it, for example, go down further. But just remember, gravity applies in financial markets and especially in financial charts. If the bulls get control, we would anticipate just passing through this 107.920 level up to the 108.953 level. This level is a little bit stronger, but you can note that there's fairly good structural support and weakening structural resistance. Of course, this is not all we need to look at. Bitcoin doesn't operate independently. It may seem so, but it doesn't. It's just part of financial markets. For example, as the S&P 500 came up, what happened to Bitcoin? It came up as well. This is the intercorrelation and interconnection between markets. I would suggest that you pay close attention to the S&P 500 futures and also the major index futures across the next 24 hours, and I'll explain why. Looking into the CTKS Method service watch list, we can see inside row 1, the risk infrastructure. We saw the VIX come up and get positive. We also saw the yields come down, which is of course very good for gold and silver. This can be a really rapid way of doing your cheat sheet. We also saw some positive momentum in junk bonds. All of these charts are marked up with CTKS levels. Effectively, what you looked on Bitcoin for was those CTKS levels. You can see the indexes. The S&P 500 and the Nasdaq was particularly strong, but the Dow has come down. When we look at the futures, it's important to understand that some indexes are going for it and others are lagging somewhat. When we look into the stock market, MicroStrategy didn't do too badly, but it got pretty much faded. We've seen the crypto market come up. Total crypto market cap came up 1.11%. But when we look at excluding Bitcoin, it's much less. And then when we exclude Bitcoin and Ethereum, just looking at the alts and the top 10, it's a different story. This means that the money flow was into Bitcoin. We've also seen that the Bitcoin proxies of Litecoin and Bitcoin Cash are currently retracing. Ethereum is not looking too bad. We've seen for quite a while now that Solana has been under pressure. It was down 3.13% in the past 24 hours. The memes are the gateway for retail to enter the crypto space. They're really important to keep your eye on. The top memes, for example, SHIB and Pepe, apart from exactly Doge, they've all come down. But we've seen the lighter meme coins come up somewhat. Now, what I would suggest that you look at and keep your eye on is the change in the VIX. There's a lot of different ways that we can look at the VIX, and I've popped them in there for you. You can get this watch list absolutely free of charge. The link is in the description of this video. Now, what does this mean for Bitcoin? It's really important that you understand what these things mean. When people are new into financial markets, they don't realize that other charts control the fate of the chart that they're looking at. For example, if you were only in Bitcoin, and Bitcoin is this blue line, if you are only investing and trading in Bitcoin and you were looking at the VIX, you may think that they've got nothing to do with each other. In fact, this couldn't be further from the truth. The VIX is the fear gauge of the main market, the stock market. And it's pretty plain that there's a very strong relationship between the two, and that relationship is inverse. This just basically means as the VIX comes up, we anticipate on average that Bitcoin will come down. But Ken, that wasn't the case. You can see it clearly. Look, you just don't understand anything. Look at this. The VIX came up and also Bitcoin came up. It's going to go into the banana zone. This is another error that people make when they're new to financial markets. I've been in financial markets for nearly 4 decades. And of course, at the start, I did the same thing. I thought, oh, all these relationships have to be perfect. If the VIX goes down, Bitcoin must come up. It must. What you will find over time is that on average relationships tend to play out over time. For example, if the VIX comes up over time, that's going to put a lot of pressure on Bitcoin. Now, why would this be the case? What's the VIX got to do with anything? Well, the VIX is the fear gauge. If the fear gauge starts to turn around and more fear comes into the market, what we typically see are all the stocks going down as the VIX comes up. That means Apple, MicroStrategy, Microsoft, Nvidia, they're all coming down. Just as when the VIX comes down, all of those stocks are doing the exact opposite, they're going up. But because people look for perfect relationships, and perfect relationships just don't exist anywhere. Except, of course, in our minds. If we think about this, if the VIX starts to rebase and starts to come up, that will mean a lot of fear is entering the market. And what happens when fear enters the crypto market? The stronger the fear reading, the lower Bitcoin's price. And don't forget, a lot of people just don't invest in Bitcoin. They invest inside the stock market. Personally, I only trade and invest in crypto. I am 100% committed to this space. Unlike a lot of other influencers who I hear talking all the time about Bitcoin and they don't even get into crypto, or they're in real estate or they're in something else. And the one thing that I've learned from the crypto market is it's incredibly risk sensitive and the VIX measures risk. Now, what does it mean? Should you wholesale panic? No, absolutely not. You just have to become a student of financial markets. You need to understand when the fear and greed index gets really high, when it goes to extreme greed, it is often accompanied by a retracement, and this is normal stuff. Don't be concerned about it. This allows you to get in at better prices. There's no question at all that Bitcoin is going up. Our job is to buy effectively. And when we look at the crypto market right now, it's in extreme greed territory. And by the way, that's not good. What is your strategy to deal with this uncertainty? A lot of people think that financial markets are like some exam that you take from school or university. That couldn't be further from the truth. Financial markets are always going up and down, up and down. If you make your assumptions based on one set of price action, you're about to get whacked. For example, in the past 24 hours, we saw nearly $500 million of liquidations hit the crypto market, with the majority being short liquidations, nearly $280 million worth. Both sides were very certain that they were correct, and both sides got whacked by the wavy nature of price. If you trade or invest without any guidelines, if you don't know where the structure is, you don't know where the magnetism is, you don't know which levels are important, you're actually flying blind. And when it comes to flying, that's an uncomfortable position to be in. The one thing that you really want to do is to invest time and effort and energy into your education. And there's a very dark secret when it comes to crypto education. The vast majority of educators are retail, and they have very little experience inside financial markets. Then on institutionally based, they don't understand structure correctly. One fantastic thing that you can do, and it is fun, you can just join up to our community. Just hit that subscribe button. We are the best community on YouTube, and we've got a lot of free resources and thousands of videos that you can look at. You must educate yourself, but not in the retail FOMO sense. So many people come up and say, oh, the 104 level, that wasn't important. Well, it actually was. The big misconception here is that these are not brick walls, they are gravitational areas. And when you get a lot of sellers, what typically the institutions will do is that they know that there is so much short liquidity above these zones that they can push it through and overshoot it. But that doesn't mean much in terms of what then follows. People buy at this top and they get faded to a point where they say, oh God, I'm out of here. And then it moves in the exact opposite direction. Retail thinking inside financial markets will destroy your profitability. It's actually really hard to understand, but your mindset is the key. If you pop across to CTKSmethod.org, and the link is in the description of this video, just hit the CTKS mindset. There's a lot of videos here that will help you out in terms of your thinking. Your thinking is vitally important. If you want certainty, you're going to be disappointed because of the wavy nature of price. The certainty actually comes from the fact that that wavy nature of price is always between a structural support and a structural resistance level. You just need to know those and then stack probabilities. That's what the professionals do. And you can learn how to draw those levels yourself through Level 1 and Level 2 standard certification. One of the things that I wanted to share with you is a really important concept, that life lessons grow in cost until learned. You can see across the past 24 hours that price has been moving all over the place inside Zone 1 and Zone 2, which is the panic zone and the blame zone. They prevent learning. Now, the prevention of learning is very, very expensive. Inside Zone 1 and Zone 2, we feel entitled to make profit. After all, we work really hard for our money. We put it into the market, it must pay us. The market says, thanks for the money. In terms of that, I'll give you learning. Inside Zone 3 and Zone 4, inside Zone 3, we learn how to make money. Inside Zone 4, we learn how to keep it. Zone 1 and Zone 2 are all about certainty, and you will find it just terrorizes you. You need to be able to stack probability and have tons of rules. Every day you're going to learn from the market, and just please remember, get out of Zone 1 and Zone 2. They will decimate you financially, personally, emotionally, and every other way. Life is very caring. It will make sure that you get the lessons that you need to learn, and it will keep on giving you those lessons until you pay attention. The CTKS method is a scientific process. We have the levels where we can look towards the right and understand what price is telling us. Right now, price is telling us that the VIX is a problem. Now, you won't hear this on the majority of other channels because they're just all moon boys and moon girls. They basically say, oh, it's going to go up forever. And fantastic. Over time, yeah, it will go up. But if you keep on buying at the top, you're limiting your returns substantially. And if you don't hold on and you sell towards the bottom, especially around structural support, you're suffering the death of what I call 1,000 cuts. Because you'll keep on doing it. Whatever you do, you need to ditch this idea of certainty. It doesn't exist inside financial markets. People who want a certain return, just put your money in the bank, and you'll certainly get no return. If you want to give your money to other people to manage, you will certainly lose your money at some stage. The only chance and choice you have is to manage your own money, and manage it intelligently. You will find, as we've all found who are in financial markets for any period of time, forgiveness is the doorway to learning. Take accountability, take responsibility, and of course, focus on your knowledge. Institutional level knowledge, that is, not retail. And you will do incredibly well. I would really love to hear from the community on what lessons you found most important. We're a sharing and caring community, so if we can share anything to help those who are new to the space, that's a really beautiful thing to do. And always remember to have 3 strategies: an up strategy, a neutral strategy, and a down strategy. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.